Hello everyone and welcome back to the channel. I hope you're all doing well. We're almost at the end of 2024 and what a year it's been. We're just starting to get a taste now of how crazy these markets can get and will get. I believe 2025 is going to be absolutely nuts, and this video is to prepare you guys for the emotions that are going to come up, the crazy prices, and just the craziness altogether that I think is going to come, because I've seen it before and I believe it's going to repeat again. And in this video I'm going to explain the way I see things and how to best prepare ourselves for what's coming. If you come to this channel to get a different perspective, a more in-depth perspective of why things happen and why markets move. I'm not going to tell you when it's too late. I'm going to tell you where the opportunities are well in advance so you can prepare yourself, not only to buy stuff and put yourself in position in that sense, but just put our emotions on the sideline and make sure we're looking at the right data so we can make better informed decisions. Now, before I get into the video, I just want to say, if you're not in the Facebook community, the Cardnomics Facebook community, I will leave the link in the description. We have just launched our Discord and it's going really well. We keep adding new features. We have great stock monitors and deal bots that alert us when stock comes into stock at various stores. This is going to come in handy, especially in next year's climate where it's very, very hard to get in-demand stock, not only for Pokemon but for other TCGs that are hot. So these are the types of things that I've even had to do myself in order to get product. So again, I'd like to share it with everyone, and if you do think you will find value in that, and also the information I give in there, you're going to get early access to sales, you're going to get exclusive content, you're going to be around like-minded people in a community that wants to support each other. And yeah, I just think it's something pretty cool that I'm trying to do there. So yeah, early days, but there's still a free trial if you want to join there, which is going to go to only 24 hours once the 7-day trial is over. So with that being said, let's get into the video. So this is something I made earlier, and I did post a video with the land cycle overlaid on what is going on in Pokemon. This is very experimental. I have not seen anyone do this, but this is what I'm here to do. I'm here to look at data. I'm here to experiment with different things and try to put pieces together that make sense to me and share it with everyone who wants to look at this type of analysis. So I have added a couple of little things here from my last video, but if you haven't watched it, I don't think there's any need to go back, but if you do want to go back, you can. I'm going to go over most of that stuff in this video. So basically what we have here, we have what is known as the land cycle, real estate cycle, whatever you want to call it, which is usually about 18.5 years each cycle. This has been going on for a couple hundred years with a lot of data to back that up. And I just overlaid a lot of the Pokemon events that happened since 2012, what's happening now, and also what's going to happen in the future. And what you see here is prices going up, or the market going up. Then you got the mid-cycle slowdown, which was our C19 crash in this case. If Pokemon was around, 30, 40 years ago, it would have been something different, but this is the data we got to work with because Pokemon's, it's going to be 30 years old soon, so this is a lot of the history just here alone. And then after the mid-cycle slowdown, you get, another peak up, which is what we've seen. The government stimulus, all the money that was printed, the cheap rates to borrow money. So all this contributes to consumer spending. And we have the opposite when all that goes away. And we've seen when the West, particular, I like to look at America because they're the biggest market. When rates started going up, inflation, they'll say they were fighting it, to keep prices down because it got out of control. This is when consumer spending gets reined in, and you have the little, slope down here, which is what we experience in a bit of sideways. And again, like this just shows you the general direction. It's not an exact way of things going up and down, but it just gives you an idea of what to expect over this period of time. So if we just go back quickly, what the similarities we have, because I believe Pokemon has mini cycles compared to this, so we can get 2 Pokemon cycles within this larger land cycle. And I'm going to show you that later. So earlier we had Pokemon Go and XY evolutions. So why this is important now is because Pokemon Go was, a big thing that came out on iPhone and Android. Everyone was hyped about the app and playing the game. This brought a lot of eyes back into Pokemon. You're seeing the craziness of people meeting up on the streets and getting together and trying to catch Pokemon out there. So it did make a lot of headlines. And then you got XY Evolutions, which was a throwback to the earlier sets. So that again brought a lot of people back because that nostalgia feeling, just people want to experience opening up the old cards again that they grew up with. And then you had a bit of a decline here when COVID happened. And again, like, we can't predict what the reason is, but for some reason, something always tends to happen at this part of the cycle, and we get a dip in the market. So there was major panic here, which was an excellent time to buy assets, especially risk on assets like collectibles, like stocks, like crypto. But yeah, after that, we got the Logan Paul video. So a lot of people think that this is what created the next Pokemon bull market. Me personally, I just think it was perfect timing. So yes, we can contribute a little bit to Logan Paul bringing eyes to the hobby, but I do believe that this was going to happen regardless. Something else would have happened that wasn't Logan Paul making the video, and we would have used that as the excuse. So that's just my opinion. But then we keep going on along, and we get to a bit more recent times. Well, at this phase here, things got very boring. Things come off the peak, and yeah, a lot of prices were overvalued, and they come back down to reality. So this was the mid-cycle, if we're looking at the land. And then we have 151 come out. So now we're starting to see a pattern. We get a nostalgic set. People come back to the hobby. Fast forward a little bit more, we got Pokemon Pocket, currently over 60 million downloads, hasn't been out for that long, which is pretty big. And we even get a set called Prismatic Evolutions, which is one of the most hyped sets, for 2025. XY Evolutions, Prismatic Evolutions, similar timing. And just something to point out, this land cycle here, this is the very, very euphoric stage, as I'm going to show you the Wall Street cheat sheet that goes over the market psychology. I'm going to go through that with all you today and just try and overlay that on what I've got here. So a lot of similarities here that happened here in that phase of the cycle. And then we got the 30th anniversary to finish us off. And this is when I anticipate a huge crash in the land market. Collectibles won't have the exact same timing, and they usually collapse a lot earlier. So it does give you a bit of sign of what's to come for the larger cycles. That the collectibles are going to collapse before these larger assets like real estate and land. So that's the quick basis of what I've got here. Down below here is the US Fed fund rate, and as you can see the relationship here, you see rates coming up. This is what we had here, rates coming up, and then you had rates coming down because they need to stimulate the economy. So rates down stimulates spending, makes debt cheaper, or allows people to borrow money cheaper. That always happens, before a crash, because when the economy is in trouble, they need to stimulate it somehow, so that's a good indicator there. And then you see these near zero rates happen for all this time here, which is stimulated spending again. And then you had the Fed raise rates very dramatically into this phase here, which is what we experienced with tighter spending and gave us a bit of a Pokemon bear market, we could say, or even a trading card in general bear market. And, lately, especially in 2024, the second half, we start to see prices going crazy. We start to see sets selling out before release. And then we also start to see now that the Fed is lowering rates. So again, we're getting this part here. See, they started to lower at this particular point before a recession. So you're going to get a similar thing here now happen again, which is a pattern that repeats. So after pointing that out, I want to go over the Wall Street cheat sheet. So this is basically, this gives you the emotional psychology point outlook on when the market's had a particular phase in its cycle. So we'll just go over this quickly, and next I'm going to overlay this onto that chart I just showed you. So we have these are the emotions that people tend to feel at different stages in the market. So you got disbelief, this rally will fail like the others. Then you got a hope, which is a possible recovery. Then you got the optimism phase, and people start believing, that we're recovered, and that's talking about this stage here after the crash. People feel anger, depression, and disbelief. And every time this happens and we capitulate, which means this is when people sell at the worst times. We always get this little rally just to, people call it a sucker rally. I call it an automatic rally. It always comes after this event here. So then we go back to where we were talking about before over here. And then we got belief starting to kick in. So again, like if you're feeling these emotions yourself, then you can kind of, pinpoint where we are in that cycle. So we got here thrill. So we're getting near the top here, but people are starting to really, get euphoric here. And this is where everyone thinks that, prices are going to keep going and, everyone's going to get rich. I better buy in now or it's going to get left behind. And then that really kicks in the euphoria stage. Everyone thinks they're a genius. Everyone thinks they're going to be rich. So people buy at the top. And then you have this, what we like to call a blow off top. And then you have the complacency stage. So the drop happens. People are thinking, oh, well, it's just normal for a market to go up that much and then correct. We're going to keep going. And then we just keep dropping. Then the anxiety kicks in, like, why is this happening? You start to question yourself. Is it going to recover? Then you're in denial, and then you're panicking before capitulation, which I was saying before, which this is the worst time to sell, but this is when everyone seems to sell because everyone else is doing it, and it feels like it's just going to go to lower or to nothing. And this is probably how you want to rewire your brain. So capitulation when everyone else is selling is the best buying opportunity. And the euphoric stage, when everyone, starts piling in because they think that this opportunity is going to get away from if they don't get it now, is actually the best time to sell. So if we can rewire our brains and keep our emotions on the sidelines and just look at this, we'll do much better in our investments. So this next one here, I'm just going to show you all how I've overlaid it. So basically, how it's going at this over the start here, this actually happens in a mini cycle here and then a larger one here. That's how I believe it happens. So again, using this chart, we can see the different emotions that the majority of the market's going to feel when we get to that point. So we have one rally here, or we have one cycle here within Pokemon, and it's just worth taking note that newer assets have quicker cycles. When an asset is in the market for a longer period of time, these cycles tend to drag out longer. So, when you got new assets like crypto or new coins, you see that moves really, really fast. And then when you have something like Pokemon now, it's been established in the market for a while, so the cycles start to get a bit slower. But then you'll see like new trading card games come in. Like when we had a Pokemon bear market and it was boring, we had games like One Piece come in, we had games like Star Wars Unlimited come in, Disney Lorcana. These are very brand new games and they have very fast cycles. So people jump on them quick and they get out quicker. That's why you get that real like high volatility in new card games. It's no different to any new asset that is classified as a risk on asset. So now Pokemon's a bit more established. We have these longer drawn out cycles. So this is what I want to explain here. So then after the C19, you start again. Then we had the boring phase here. Then we start to get hopeful. And now we're about at the belief stage. So this is what I wanted to prepare everyone for today. This is how we know what stage in the cycle we are at. And this is how we're going to prepare ourselves for what's going to come next. And again, it doesn't have to happen, but this is just the most probable outcome that I believe will happen, next year and into 2026. So I'm going to give you plenty of time to prepare. And if you were part of the Cardonomics community, when I started it, back earlier this year, I told everyone that I was accumulating here. And again, I don't tell everyone what to do or anyone what to do for that matter. I just share what I do as an experienced investor in the space and someone that's built a business in the TCG scene. So this is just my experience and I share what I do so people can just learn or just take note of what I do and take what they want and apply it to their own investment thesis if you're an investor, or if you're wanting to start a business in the TCG space. Well, I'll let everyone know a lot about that side of things as well. So again, my goal here is just to try and educate people the best I can, given my experience in the industry. So, and then just give a different approach to everyone. Something else to think about that, no one else out there talks about. So yeah, basically, this is what I believe is going to happen at the end. We are at belief. We're going to get to the thrill and euphoria stage, which is the most risky part of the cycle. So, next year is somewhere I'm looking at where prices are going to get really crazy. But the more crazy prices get, the more risky it becomes. And the closer we are to this euphoria stage. So, again, accumulation here. This is when we start to prepare to sell. We can still buy and sell stuff, in this euphoric stage. There's still, a lot of opportunity within that space. But, one mistake I've made in the past, I've held things too long thinking that they're just going to go up forever. Then I got stuck with the heavy bags. So I'm not going to do that again this time around. I've got things that I invest in and put away for myself. Those are the things I'm going to start looking to offload soon. And then I got the other stuff that, is for the store. I buy and sell just like a normal store. So two completely different things there. I make sure I've got a plan for both. So, number one, make sure you got your plan. Number two, make sure you're aware of these types of things and how markets act. And yeah, number three, make sure you do enjoy it, but just be aware that these things happen and put your emotions on the sideline and make sure you make better decisions. So I'll leave the video there. I hope you enjoyed that one. Thanks for watching and I'll see you next time.